Hello, hello. Hi, everyone. Can you hear me now? I think that made it all better. Give me 1 second. One second. You. Give me 1 second. He's having a hard time coming in. Give me one. Please be patient. All right, so as we wait for Chris to join us, Chris is with Freedom Mortgage, and today he's going to be sharing some information with us about what they can offer any of you if you're thinking about getting a loan or getting a mortgage. And so I like to interview different mortgage companies, different loan officers, just because each office, bank, whatever, they all offer different products. It's really not a one size fit all. Oftentimes they all overlap with each other, and it will cover, it will get the job done for you. But that doesn't mean that it is the best product that you could have gone with, especially if you're looking to use like down payment assistance money or anything like that. So I'm just waiting on Chris. He was having a hard time getting in. So as soon as he joins, I will really get started. But in the meantime, if you can share this, if you could start a watch party, I would definitely appreciate that. Yep, I see him coming in now. Hey.
How's it going?
Good. All right, we are live. And I just want to share this now that you're on. Give me 2 seconds.
Mm-hmm.
Okay, perfect. I'm ready. All right. So I was just sharing with everyone kind of like what our topic is today, just about obtaining a mortgage and what we're seeing out there. So first, can you just start by sharing with everyone or introduce yourself with everyone?
Absolutely. Can everybody hear me okay? Can you hear me, Andrew?
Yep, I can hear you.
Okay, wonderful. My name is Christopher Hardy. I'm from Freedom Mortgage, loan officer, or mortgage banker, whichever one you prefer. Been in the business for about 6 years now. Been a loan officer for about 3. Um, I also specialize in 203Ks, which is the renovation loan product. But I'm very comfortable with pretty much most of the products, including refis. So that's kind of the introduction to me.
Okay, I appreciate it. So I keep asking this question just because I like for people to get a feel of what's going on in the market. I'm hearing a lot of information of people saying, well, are homes really selling? Are people really doing deals? So what has been your experience? Are you doing deals? Are you still approving folks, or is it just kind of silent for you?
Wonderful. So for good news, we are doing all right. As a company, Freedom Mortgage is actually kind of breaking records right now across the nation. So business is definitely up. As far as myself, business is up. Definitely kind of incorporated refinances, can't lie, to supplement some of the stuff because the rates are so good. But people are still purchasing, man. Like I said, kudos to you realtors. You guys are kind of spearheading this thing and kind of keeping it going. And definitely, people are still interested in purchasing. Why not? Now is the time, if you can, to definitely capitalize off these good rates and just a lot of what's going on. So, business is booming.
That has been when I talk to loan officers, when I talk to title companies, everyone is saying, no, we're moving. Actually, they're like, I feel like I'm busier now than I was before. And I'm not sure like what's causing, well, interest rates. It's probably the interest rates overall is what's causing that chain reaction. But so you're still in loans. And then can you talk about, there's been a lot of changes at different mortgage companies in terms of the requirement for your credit score. Can you let me know kind of where you guys are at?
Yes, we can expand on that. So to be quite frankly, Freedom is at 640.
Okay.
I do believe pretty much with a pack. There are a few banks that credit scores a little higher than us. And there's still, I mean, to be quite honest, there's still some lenders that's going underneath 640. So 640 is kind of our cutoff, our minimum score. And to be honest, though, I mean, not to kind of just sell rates and all, but shoot, if you can get there, man, you can definitely get a good quality product right now. Definitely from us. Go ahead. What was you saying?
No, we're just in terms of the score, but at 640, that seems to be about average where everyone is. Obviously, some higher. Very, very few that are coming in any lower. But even still, that they're probably a little bit more cautious than before.
Right. And if I may, can I expand on that a little bit? So the thing about it is that number one, I think something good will come out of this. The number one thing is, let's be honest, a better credit score helps us all out. Okay. And that's not just in homes. That's in your life. Because some of the stuff that correlates with a good credit score helps you in life. Like for instance, if your debts are paid down, if you're not overusing credit cards, those are things that's going to help your score and help your life. Keep them bills paid, keep things down. So there's nothing wrong with a little higher score. Don't get me wrong. I come from a place where we used to do 580s, 500s. And honestly, Freedom does have a product from 500 to 549. It is just suspended for right now. So, I mean, there is hope. But to be quite honest, anytime you guys can improve your credit score, do it. It definitely behooves you. And honestly, I'm coming across a lot more people that's ready to go. And even if they're not totally at 640, they're at 620, 630s. I mean, they're just paying down a credit card for 500 pretty much, and we're rocking and rolling from that point. So I have a lot of confidence in the consumers out there. You guys are doing what you're supposed to do. I talk to people every day that's doing the right things and getting their credit scores up. So I'm not really. Of course, you're going to miss a couple people, and like I said, there's still lenders out there that's willing to push it for those people. And Freedom, we will get back to that. But for the consumers that's ready to go, right in that 630, 620, if you think you're right there, chances are we can kind of get you over the hump to get you ready to go. So,
okay. And then what about down payment assistance programs? A lot of people are always asking about, where's the first time I hear about these first time home buyer programs? Do you guys offer those?
Absolutely. So here's a cool thing, and I'm glad you set this one up for me. Freedom is actually coming out with it's called a down payment assistance tool. And what we'll be able to do is when I take an application for a consumer, we're going to be able to put basically take the application that we're putting in there and kind of run, and then it's going to tell us pretty much what down payment and what extra programs that they're eligible for. So yes, we do have down payment assistance. We have a couple programs. A lot of people are not familiar that for instance, OFA doesn't just do down payment assistance. It can also lower your rate if you already have your down payment assistance money. So you can get a crazy stupid rate using OFA if you want to just kind of do it that way. Another thing to think about is down payment assistance there's ways for tax credits. Okay, a lot of LOs don't push the down payment assistance programs that offset taxes, but when you start to think about places like Shaker Heights and stuff where the taxes are kind of higher, I would definitely encourage people maybe to explore and make sure your LO is exploring all the programs, because maybe you do have a little down payment assistance. Maybe whatever reason a tax program, and maybe to offset some of them taxes will help. Sometimes mortgage insurance. There's programs out there that'll help you pay for mortgage insurance and stuff like that, and kind of single pay that, so you don't have to worry about that. So yes, we do offer down payment assistance, but there are some other programs out there. And then with that tool that we have, even us guys like me, sometimes you don't know, or you're not even thinking about that niche program that somebody might be afforded to in that. So with us having the opportunity to actually kind of run that, hit that button, and it spits out all the kind of the programs that they're that they can be eligible for. That's a cool tool. Not only that though, Home Ready is a product that a lot of people don't talk about. You can do a 3% down payment for conventional mortgage. Okay, that's a myth. People think it's 20% down, 10% down, 5% down. The customary is 5% down. But for you first-time home buyers, the Home Ready is Fannie Mae, and Home Possible is Freddie Mac. They afford for that. There is an income credit limit, so they're looking for the consumer that's right in the middle income America. The mortgage insurance is cheaper, okay, for the Home Ready than regular conventional. Okay, so you're saving money there. The rates are kind of built in to be better and cheaper. So you're going to get a better rate with a Home Ready or Home Possible. And like I said, again, 3% down. So that's not even without doing anything extra. It's not even a down payment assistance. It's more, you do have to take a home educational course. And I do believe you provide those HUD certified courses. Am I correct?
Yes.
So yeah, so we can definitely, somebody can go with you, get that, because since you're HUD certified, Fannie Mae takes that, transfer that over. So anybody who wants to get in the Home Ready, they can go online, but then again, they can take a HUD certified class, get that certificate, and there's no extra, there's no OFA, there's no extra program just to go Home Ready or Home Possible. So think about that as well. So
okay, so if someone starts out like FHA, just they put their 3.5% down, and then they have that PMI attached to it, because a lot of times that extra amount, they're like, whoa, I have to pay this monthly. How long do they have to wait? Are they stuck in that? I guess we'll just say it like this. Are they stuck in that FHA with that PMI for 30 years? Can they refinance out of that?
Wonderful question. So here's why. Okay. And this is like the niche to it. Okay. FHA, if you put 3.5% down, you do have mortgage insurance for life. Okay. But two things. Number one, if you go streamline and refinance later on, they automatically reduce the term of that mortgage insurance. Okay. Excuse me. If you're not going 96.5, you got a little equity on your home, you can actually you will have mortgage insurance for life. Unless, okay, if you put 10% down or refinance with an FHA, then you have it for life. There is a set time where it falls off automatically. The pro is with FHA, okay, conventional mortgage insurance does fall off. Okay, it does. However, you have to initiate that process. So there will be an appraisal to verify that you have the equity. It does not fall off automatically. The difference is FHA is for life unless you put 10% down, or like I said, in refinance situations. Like for instance, 10% down, you have mortgage insurance for 11 years flat. At 11 years, you don't have to call anybody. You don't have to get no appraisals. It comes off. So FHA is cooler there. But again, the standard is for life.
Okay. So just to be clear for everyone too. So if you're not doing like down payment assistance, how much should they expect to bring for closing costs? Like what is a good amount for savings?
Okay. So here's the thing about this. And if any of our realtors are out there as well, I think that's one of the dynamics of a loan officer and a realtor is coming up with that game plan. Okay. Obviously, I see a lot of realtors out here. Their game plan is come in, no closing costs, and we're going to get an approval faster. That might be true. I mean, don't get me wrong. If you're not asking for anything from that seller, of course your offer comes in a little bit more enticing. However, standard is most people have some. Mm-hmm. So if you get a standard amount, me and my realtors, I'm not trying to, I'm not trying to, if your FHA is 6%, if your conventional is 3%, okay? If we're going conventional, I would like to add that 3%. If we're going FHA, I don't really try to go 6% unless it's needed. I'm setting that up before I say, give $100,000 for FHA, closing costs. If you're getting a couple dollars seller concessions and we're not trying to buy the rate down, you can expect something between $3,000 to $4,000 coming out of the pocket. I mean, to be honest, if you start going up, you start going up. I mean, sometimes even if you're under 100,000, sometimes down to 2,500. However, FHA, you do have to have a minimum, basically skin in the game. You got to put a minimum amount into this loan. So you can't. There's no such thing as a free loan. FHA won't allow you. You have to have some skin in the game. That's your earnest money. That's your appraisal, and then that's your closing costs at the end. Okay. There will be some skin in the game, but a lot of times people are walking out of there with their 3%, 3.5% down, or sometimes even less because of the earnest money and so forth. So I would say $100,000. Be prepared for between $2,500 to $4,000, give or take. If we go to like 100 to 2,000, 100 to 200,000, you still can get it done under 10,000, no problems there. But I think you want to start to kind of understand that the higher you go up, the higher that down payment is. At least have the down payment ready to go. Okay, I think that's the best way, because you're going to get credits, you're going to get stuff like that. But if people can actually come with the 3.5% of whatever the purchase price is, or if they could come with the 5% of whatever that conventional purchase price is, 9 times out of 10, we're going to fall up under there. But that's a safe bet. It's a safe bet.
Okay. So tell me, or let us know, what is different about Freedom Mortgage, or what sets you guys apart from maybe another mortgage company or a bank out there in the market?
Well, first thing that sets Freedom apart is I have to be a little vain. Is the loan officer? Is the person you deal with? Um, I have confidence in myself, so wherever I'm at, I think you're going to get a professional who really. I mean, I'm gonna be honest. I'm a good. I care. I care. So anything I try to put you in, I'm thinking about your best interest. I'm thinking about your wants, needs, but I'm also thinking about, hey, you specifically said you really don't want to go past this amount, and now we're there. Are you sure you want to be there, or have your wants changed or whatever? So the thing that separates is obviously number one is the loan officer. If you got a good loan officer, it's a game changer no matter where you at. But specifically speaking about the company, Freedom's been around. Okay. Definitely, like as far as lenders and non-banks, we're like top 3, top 4 in the country. We have the technology, and we got a lot of more, as I mentioned, the down payment assistance tool. We got the apps, we got flyers. The technology is there, and the technology to serve the people without a physical location is there. Okay. So Freedom, just to give you guys an example, Freedom was for the most part 80% working at their offices. The company is now pretty much 90% at home and functioning and producing just as much as it was. So you're talking about a company that's ahead of the curve, a modern company. Of course, low cost fees. That's kind of the belief in Freedom is everything is low. Now, I will say this: bear with us patient wise because we're so busy. We're actively hiring underwriters and processors right now.
Okay.
Okay. So you can imagine that with the pandemic, with incredible sales, we are a little behind in turnaround times. Okay. But other than that, man, it's a great company. People want to close loans. Okay. That's the main thing. Underwriters, people are not trying to just deny people. I have a great Ohio staff. Harry Azano is my branch manager. Wonderful guy. Definitely cares about the consumers and us loan officers. So if I had to say one thing, Freedom is family oriented. We're definitely cutting edge, but it's a big company. So
okay. Now, so in the Cleveland market, we typically have some lower house prices. Can you tell me what's the lowest amount you guys will lend on? Is it like typically like around 50,000 or?
Yeah. Okay. So of course, no one wants to get in the habit of doing too low, because there's when it's so low, any little thing can kind of throw it off. So for instance, like if a person wanted to buy a rate down, if you got a 40,000 points on that, they got to take the rate, whatever it is. They can't, because it's just not enough meat on that bone. With that being said, I've asked my branch manager, I do believe we can go to like 37, 38,000. I would say for myself personally, 45 is kind of where I would like to be. We can make some exceptions if you want to talk about it. If you want to do a renovation, 40,000. Let's just say you have a $40,000 home, and then you want to put some upgrades to it and spend another 20,000 for a 2 or 3K renovation. I'll definitely entertain that more than just going with a flat out 40. Just in the house could be a issue and so forth. So yes, we do go down to 40. I can do 40. I can really even do like 37, 38. No one has done it. But if somebody has an offer and they got something in the 40s and they want to run it past me, I do welcome that.
Okay. And then you've touched on it a little bit off and on about a 203K loan. Can you just talk about that a little bit more explain a little bit more detail what a 203K loan is? Obviously, you guys do those, and a time frame that we should expect to get through that 203K deal. Can you hear me?
Yes, I can. Yeah, you were breaking up a little bit, but I got it. I got your question. So a 203K and home style. Okay, conventional does have a renovation product. Okay, so even if you don't necessarily have to go 203K, I think 2 or 3K affords its own benefits. Me personally, FHA, you get better values than you do conventional. I mean, it has never been proven, but to me personally, I think you're more likely to get the value at FHA than you are conventional. Don't ask me why, I don't know. But with that being said, that's why a lot of times we go comfortable when we go 2 or 3K. There's a little bit more for 2 or 3Ks. You can like for instance, all right, $100,000 home. Okay, let's say somebody has $100,000 home. And they want to put 20,000 of repairs on it. Okay. Conventional, you're not going to be able to go. You're going to need that value to 120 or really 125 in order to do the home style. Could be a little lower. Let's just say 100,000 purchase price, 20,000 of repairs, but the appraisal comes in at 110, 112. You can still get your 20,000 versus home style. You're gonna have to cut your bid down. Okay, backing up. FHA. Go ahead. Did you have a question?
Mm-hmm.
Okay. So 2 or 3K loan basically is the main thing is you want to get a contractor that's licensed, bonded, certified, and knows their way around. Obviously. You want someone who has the financial ability to kind of front some of the project themselves, because yes, 2 or 3K renovation loan contractors do get a little bit after it closes, but they're going to have to come with some of their own money and then kind of get paid back. So you want a credible contractor. You want them, like I said, licensed and bonded. They have to be. If they're doing any work on bathrooms, they need a plumber. If they're doing electrical stuff, they need an electrician. They're messing with hot water tanks and stuff, HVAC. But the beauty of it is if you got that home and you're getting it at a good price, and for instance, I just closed a loan. No, you asked about turnaround times. About 45 days is normal for 2 or 3K. It just takes longer.
Okay.
Because you have contractors, and if you don't get the right contractor, those guys don't like paperwork. They don't. They're tardy with it, and it just kind of takes some time. You know, I just did a 2 or 3K close. Thankfully, closed yesterday. Actually, she had to go through 2 contractors. Sometimes that happens. The bid's got to be itemized and done the right way, and if they're not, they got to do them over. So sometimes contractors get a little frustrated. Sometimes, obviously, they have the competence to do small plumbing jobs by themselves, but we require that they have to have a plumber at least sign off or have a plumber at their disposal. Sometimes that frustrates contractors and they want to walk over stuff like that. So the process is a little bit more work. But for instance, for my situation, I had a client. They were bringing in my mother-in-law. Mother-in-law was older, and so they wanted to add an additional bathroom to kind of get the mother-in-law suite kind of done up for her. So we were able to do 2 or 3K. You do need more patience. Sometimes it can be a little tense, but I just recommend. I tell you guys, get a good contractor. You get a good contractor, it's almost not quite, but it's almost like doing a regular purchase. So
okay. So is there anything that you want to share that with the audience that maybe I didn't ask you about that you think is important?
So my final thing is this. Don't wait. Okay. Do not wait. It is a great time for a couple things in this country. Number one, to buy stocks. I've been buying stocks. But in the same breath, don't wait, man. Get a home. This is when you're talking record lows for the nation. Okay, I'm not even talking about for one bank or one lender. We're talking about national record lows as far as interest rates. It's the same. It's almost the same ideal as a stock. You buy low. Okay, this is the time to buy low. Get yourself in the market. Get in position because it might take. I mean, the demand for houses is high too, so it might take you a couple rounds to find a home. Get pre-approved. Okay, get pre-approved. And don't waste no time. This is the time. And if you think you're not at 640, but you think you're close, and don't try to solve your credit scores by yourself. It's okay to come to me. Okay, it's okay if I tell you you're not ready yet, but this is what you need to do. Don't take it as a slight. I'm like a doctor at this. I've seen it all. I've seen great. I've seen poor. If you need to find those questions, don't start paying stuff off without talking to a mortgage professional, and don't bother your realtors about seeing homes if you're not pre-approved.
Thank you.
That's pretty much it.
All right. All right. Well, thank you so much for joining us. Excuse me. How can they get in contact with you? Are you on social media? Should they email you?
Okay. So basically Facebook, Christopher Hardy. If you put up Christopher Hardy, I'm in Freedom Mortgage. Once you search for Christopher Hardy, you see Freedom Mortgage, you got me. On Instagram, it's called Chris _ the number 4 home loan. So it's called Chris 4 home loan, but I got it broken up. So it's called Chris _ the number 4 home loan. I'm also on LinkedIn as myself. So yeah, I'm not hard to find. If you see me on a messenger, anything, call me, DM me, email me. My email is christopher.hardy@freedommortgage.com. So do what you gotta do, man. I'm bored. I got time. I want to talk to people. Call me.
Well, I don't see that we have any questions, but I just want to thank everyone for joining us. I actually will be back on here today at 6 p.m. I have Tyler, who is a home inspector. He's going to share some tips with us of what we should be asking and looking for when having a home inspection done. And yes, you should have a home inspection done. It's safe.
I recommend
it. So thank you so much, Chris. And
it's been a pleasure. Thank you, guys. I enjoyed you.
All righty. Thank you.
Take care.